How are you, my friends? You're welcome to my YouTube channel. Today, I'm going to be teaching you guys how to properly use your Fibonacci. Just like most of you guys who are new, who are probably trading all the concepts that you all know there, it is very, very important for you to understand what Fibonacci is used for. And one of the great tools that Fibonacci is used for is to check the 50% between the highs and the lows. And most of the times when we come into Forex trading and we don't understand all this tool that is used in Forex, there are chances that you might be making mistakes. And there are chances that when you place a trade goes in the wrong direction. Why? Simply because you don't know when to buy, you don't know when to sell, you don't know when to stay out of the markets. So this tool I'm going to show you today, I'm going to show you right now, is one of the tools that have been helping me in knowing when to buy, when to sell, and also when to take my profits. And it is called Fibonacci. So Fibonacci, I'll give you a very, very little explanation of it, or probably an example. Now, when you come into business, there are chances that when you make a business, you don't want to be going into 50-50 business. Why? Because in this Forex trading, we all want to make profits. Even in the physical business, you don't want to bargain a business that will end you up into 50-50%. You would like to buy from the discount area and sell in a premium area, right? So this is what Fibonacci is used for. So in forex trading, Fibonacci helps you to tell you where the premium area is and also where the discount area is. And as soon as you're buying from the discount area, you are making a lot of profit for your own self. Not that you're not buying from a premium area and before you know, it stops you out. So in this video, I'm going to be discussing very much well on how to use Fibonacci. And I'm going to be showing you guys the practical aspect of it so that when you see it or when you start using it on your charts, you know how to properly use them. So make sure you subscribe to our YouTube channel and also comment and like, and probably you share to your friends as well. It might also help them to know how to properly use Fibonacci. Let's see you in the other side. Thank you. Bye.
And we're going to start with the diagram first, of which, if you know me, you know I like doing with diagram. So let's assume that we have a trending chart or a trending market, which is going to the upside. Okay. Then we'll also have something like to the downside, whereby the market is trending to the downside. So, and here you see the market breaking structures and, going to the upside, and keep breaking structures going to the upside. And here you see market breaking structures dropping to the downside, right? So this is what we call an uptrend, and this is what we call a downtrend. So there are times you're supposed to trade and there are times you are not supposed to trade. So let's say the market keep trending to the upside and it is not giving you a pullback yet. This is a time you are not to trade the pullback. Like, this is the time you need to stay away from the market. Why? Because the market is still trending. It has not given you a way of maybe pullback, then you have to start buying or selling. So whenever you see markets like acting in this kind of manner, that it has a very bullish momentum and it keeps going and going, it is not the right time for you to trade. So it is the right time for you to just pay attention to whatsoever the market is doing, then get to enter the market when it is giving you a very good opportunity. And I see most people, the market will be here and they'll be struggling to like get into the market when the market is still on a premium areas. And remember, we are here to make profits. We are not here to make losses. So now, how do you trade using Fibonacci? So let's say the market starts consolidating around this area, and you see it consolidating around this area. You see, most of people will get to pull Fibonacci like this, and this is not how Fibonacci looks like. Number one, this is how Fibonacci looks like if I'm to pull it. So this is exactly how Fibonacci looks like. Now, because I want to see my 50% zone, the only one I want to see is just the 50%. Why? Because the 50% will show me the highs and the lows. Then for me, what I want to see is, okay, where is my discount area and where is my premium area? So this is why I just have just only just one Fibonacci zone, which is this one that is showing only the red sign that you see here right now. So this is why I put it here. So what do I want to see? I want to see where my discount zone is, which is starting from here. That's my discount, right? Then I want to also see where my premium area is. So for example, something like this, okay? So on here you can differentiate it between the what's it called? Like between the higher side and the lower side. So here I can probably tell, okay, this is where my discount area is, and this is where my premium area is. Now, as a trader, what you want to be doing is to buy from a discount area and to sell from a premium area. But you find some people and they'll be placing something like a buy position from here, of which it is wrong. So when you notice that the internal structure is dropping, like it is forming lower low and lower high, lower low and lower high, this is whereby you now pull up your Fibonacci from the swing low, then down to the swing high, something like this. So when you see it, then when you notice that the market keep dropping to that lower side, then you can start planning for your trade right from this zone. Why? Because the trade already is on a pullback and it has gone to that discount area. So now you seeing the market coming to a discount area, this is whereby you start preparing to sell. You start preparing to buy. Now you don't prepare to sell anymore. You start preparing for buying position. And when you're here, you're selling the market. Trust me, it is not a good sell position. You can't be here and you're selling. So if you're here and you're selling, you're not going to make a very good profit. Let's say the market is going to wait for some time, or the market is going to trend for some time. You're not going to make profits. Yeah, because the market demands that you sell from a premium area, okay, which is right from here, and then you buy from what? From a discount level, which is right from here. So let me also give you just one example from charts, then you properly see what I'm saying. So if you look at this zone, okay, so I'm gonna fast forward it to this zone. So let's say the market did not break this zone. For example, let's say that the market did not break this zone, okay. So mainly looking at this, you cannot tell if the market is about to pull back or not. Why? Because the internal low is still holding. This is our internal low here, but we can probably choose this our major internal low, because when you get down to lower time frame, here right now is a break of structure, a very nice one that is being seen. So now the internal low is not yet pulling back, like on this zone, on this time frame that we find ourselves. Is not pulling back yet, unless we move this, right? So but how are you going to know when to pull this Fibonacci? Now when you get down to lower time frame like 15 minutes, you see that the internal low is pulling back already. So in that case, you come back to 4 hours, then you pull your Fibonacci from this high down to this low, right? So now you can see that the market is on what? Is on a 50% zone. So between the discount zone and the premium area. So where our price is now is where we need to be searching for a sell position. So let's fast forward the market and see what the market gives to us. So now we came back there. Now you see, if assuming that we're able to remove this high, okay, we're able to remove this high, that means there are chances that we're going to go high. Do you understand? Because number one, market is on our discount zone already, which is around this area, okay, of which what we're supposed to be doing there is to be searching for what? A buy position that will take us to high, right? So if market eventually pull out this high, then that means we'll have something like a pullback here that will give us a bullish move, but we'll never see something like that. So let's see what the market did next. So you see how the market respected that high and came down and tried to lure us to enter for a buy here. So there is no way we are going to take this buy if this high was not taken out. Why? Because when we take that high, when we take this buy, definitely we're going to be stopped out because this high was not taken out. So in summary, Fibonacci is used to discover the 50% zone, number one, and also to discover where our discount zone is, two, and also discover where our premium zones are. So it helps us to know exactly where to buy, where to sell, where to exit, and where to take our profits. So this is what Fibonacci is used for. So if you want to see more of the examples and more of the practical aspect of it, just comment below, then I will make a new version of videos so that you can get to understand it more. Thank you for waiting and thank you for